It was just another Monday in the notoriously volatile cryptocurrency markets, which stay open 24 hours a day, 7 days a week. Traders in the 11-year-old digital asset industry described few changes in business activity or sentiment as coronavirus-related fears gripped Wall Street and sent stock markets reeling. "We're not the ones uncomfortable with the volatility today," said Ricky Lee, co-founder and head of Americas at Autonomy, a cryptocurrency-focused proprietary trading firm. Prices for Bitcoin, BX, slid by 2.9% to about $1 as of 16:48 UTC 12:48 p.m. Eastern Time Monday. That decline was less than half the 7% plunge in the Standard & Poor's 500 index of large U.S. stocks, a drop so fierce it tripped market circuit breakers, temporarily halting trading under exchange rules designed to help limit investor losses. The latest sell-off in stocks left the S&P 500 down about 18% since its record high on February 19. Since then, Bitcoin has fallen by about the same percentage. Yet, on a year-to-date basis, Bitcoin is still up about 8.6%, in contrast with a 7.7% loss so far in 2020 for the S&P 500. Meanwhile, the CU Volatility Index, the VIX, a measure of implied volatility on the S&P 500, is trading at its highest levels since the financial crisis. Sometimes called the Fear Index by traders, the VIX measures the S&P index's expected volatility in the coming weeks and usually rises when the market expects stocks to fall. Few assets are safe when a black swan event such as the coronavirus takes hold of the markets on a global scale, Connor Abinshine, a research analyst for digital assets data, said in an email. Bitcoin may find its footing and shine further down the road during this financial crisis. One clear takeaway Monday was that as traditional markets undergo a level of anxiety not seen since the 2008 recession, the cryptocurrency industry showed few existential signs of distress. In fact, Bitcoin's hash rate, a gauge of the amount of computing power working to confirm data blocks on the underlying blockchain network, was holding steady at around 122 exahashes, or quintillion hashes, per second, according to blockchain.com. That's roughly double where it stood in mid-2019. Denis Vinokurov, head of research at the London-based digital asset firm Bitquant, said he was seeing interest in new loans from borrowers who have become more bullish on Bitcoin following the recent price drop. He spent a good portion of Sunday morning trading WhatsApp messages with one client who wanted a loan denominated in stablecoins, digital tokens whose value is linked to a government-issued currency like the US dollar. The borrower wanted to use the loan to buy new computers for data processing on the network, known as Bitcoin mining, because the rewards are paid out in units of the cryptocurrency. "We're not seeing any change in sentiment," Vinokurov said. "There's no mining capitulation." TradeBlock, a digital asset analysis firm based in New York, wrote Monday in a blog post that the average daily price swings in the S&P 500 recently surpassed those for Bitcoin. According to the firm, that hasn't happened since October 2018. Chart showing average volatility of Standard & Poor's 500 index climbing above Bitcoin's. Source: TradeLuxus. TradeBlock steep gains and losses are. You can read full post on CryptoFans News, link available in text below.